whether it's a continuation or reversal. All right, let's move on to another pattern here. That's a double top. And the double bottom is similar to that, except just the opposite move. All right, so you're looking at the same characteristics. If you get a wide support and resistance line, you have to be careful of the breakout to make sure that there's some strong momentum behind it. The tighter the range between support and resistance on a double bottom, then the greater the chance that you're going to get a solid breakout. All right, another pattern that's just pretty rare is a triple top. Same characteristics, except you have an extra top in there. And again, you want to see a very narrow range on the breakout. And if you're getting a wide range, then typically you're going to get a chance to trade swings, or you're going to approach a breakout differently, as I showed you with the double top and double bottom. We also have a triple top and triple bottom, which again are kind of rare these days, because the market action seems to be a little bit shorter in terms of price and time. So, but these patterns do come up periodically on AutoChartist searches. Now, finally, my last pattern in this section of the webinar is this falling wedge. Now, some people will say, why do you have falling wedge in there? Because the lines aren't parallel. Well, that's why I put it last. The reason why I put a falling wedge in here is that a falling wedge has characteristics of both the triangle and the channel. From a triangle, the characteristics it picks up on a triangle is that the lines slope a little bit, and they narrow as the move matures. However, they don't touch in the future like a triangle does. Okay, so they have both the characteristics of the channel and the triangle. And what's actually good about this is that as this market narrows, okay, then that what I was telling you about how wide the channels can be, and how sometimes it's difficult to sell weakness or buy strength in a channel because of the width of the channel. Well, with a wedge, you get some of the narrow action, the narrowing, like you do, say, in these triangles you can see here. And the narrower the market gets, the greater the breakout tends to be, because traders have been watching this pattern develop. Again, the length of the pattern, the longer the pattern, the stronger the time period. When you see traders watching this a pattern develop over time, and they start to see it getting narrower and narrower, that's basically telegraphing when a breakout's going to take place. So when they see that narrowing action and then a breakout, then traders tend to be a little bit more aggressive on that move. When it comes to a channel breakout, then traders tend to be less aggressive, because much of the move has already taken place inside the channel. So that's probably the key reason why you get a little bit of whipsaw action on a channel breakout. But with a wedge or a triangle, you tend to get a very clean breakout. Okay, and inside, also besides the falling wedge, you have the rising wedge, which has, the same characteristics, the narrowing of the action and the pinpointing of a particular breakout. So that's why I include the wedge in my channel webinar, and in my definition of channel markets. So if we go to the live action again, we're going to take a look at what's going on in the stock indices this morning. You can see I have a lot of alerts going off. These orange buttons here indicate that I am getting live patterns taking place. So this is the Germany 30 index CFD, and this is actually a channel breakout. And again, it's not a long period of time, and it's only a 30-minute chart, but you can see that based on the size of this candlestick, that you have a pretty solid breakout. Matter of fact, it's a maximum 10-bar breakout. So this indicates it's expecting some volatility. Okay. Now this is an example where this shows some narrowing of the channel. It's not as wide as it was here, so it is narrowing here. And if you notice, if you didn't get a straight up move from this low through the breakout, that you had this little pause in here, and then a breakout, and that makes a difference on those breakouts. You need to have a market that goes from top to bottom in like a V formation. Tend to be the ones that fail up here, but the ones that show some kind of a support base, then they're the ones that basically launch. I remember talking to some traders one time, and they were saying that it's like in basketball when you're trying to stuff or jam a basketball, is that most of the players get a running start and try to stuff it and have more success than a person who's just standing under the basket trying to jump straight up. So you like to see some kind of up move, then a pullback, then another drive, kind of like I mentioned before, like a slingshot move. Markets that just come down and turn and go tend to fail. And another old saying we have here down in Chicago is that the height of the market's often determined by the length of the base. So if you have a strong base, you typically have a stronger move. Just like you're building a house, you want to have a good foundation. So there's your channel down breakout in the stock indices. Now, I was looking for a wedge pattern. Let's go back to the Alex Majors and see if I have any kind of wedge patterns coming up here. It doesn't look like a wedge is very popular today. It seems to be all channel breakouts and double top breakouts. Now, I mentioned earlier that how to work these searches, and in this particular case, I was working with a continuation stock search. And before we start that, let's take a look at another question, and so that we can take a little rest here, give me a chance to catch up and let the markets catch up a little. And the question is, which is considered a channel chart pattern? The ellipse, the triangle, the wedge, or the head and shoulders? Good. We have pretty good participation, and the majority have picked up on the wedge pattern. The ellipse is really it's basically an elongated circle that some traders use to surround support and resistance. Triangles are, again, they're compressed, and their lines are parallel, and so we said a parallel line is one of the key characteristics of the chart. Now, the head and shoulders is a reversal pattern, and it typically looks sometimes like a double top, but actually, instead of having the two tops or the shoulders at the actual peak, what happens is a head and shoulders is a shoulder, then a head is higher than the shoulders, and then the next shoulder is lower. So it's kind of like an inverted double top. And also the wedge, then number 3, carries the characteristics of both. So very good there. We have a passing grade for the class there also. Now I'm going to move on to show you how to do these particular searches yourself so that you can see. This looks like a trade that just came up here, live action here on the French 40. Yes, is there a question coming up?
James, I'm sorry to chip in again. I want to quickly ask you something about wedges.
Sure.
Should wedges typically be reversal patterns, or can they also be continuation patterns?
Wedges can be both continuation and reversal. Okay, if you search for reversals, you can filter yourself out of the market. So I tend to leave it either searching for continuations or I search for both. And the reason being is that a wedge sometimes becomes a part of a major campaign. And that means that if you have if you have a major top forming in the market, oftentimes you'll get the first breakdown that'll show the market is in a very weak position. And then what happens is it forms a wedge, and then the wedge breaks and it continues down. So I tend to try to look for them as continuation patterns. But so I don't see a lot of reversals on wedges, but I see them as continuation patterns. Okay, here is this just popped up in the French 40. You can see that as a falling wedge pattern. Okay, and this is a continuation again. Basically, you've had a downtrend in the stock market for several weeks, so this is where the market picks up. And the size of this was very powerful, and it looks like it's even headed towards this target in just one bar. So this is a wedge pattern that just came up. The Dow was showing a rising wedge at yesterday, and the market then began to break through this this area here, and it's beginning its move towards the target. So here's when you see this action after a breakdown, it doesn't. When you're working with channels and wedges and flags and double tops and double bottoms, you really don't get. So oftentimes you're not going to get that real quick momentum moves, as I said. That sometimes the market, because of the nature of the day, yesterday was 2 central bank meetings, and also we had our president in the United States give a speech at night. So you're getting this indecision, you get this sideways, and then once that event takes place, then you get your continuation move. So U.S. markets are just opening right now, and so I would be willing to look at this in a few minutes, and we might even see a market down into this zone already. So remember that it's not always the pattern's fault. It's just a matter of volatility and volume. That's what makes these patterns work. Now, what I'm searching for here, in this case, when I go into this, is I'm looking for stock indices right here, all intraday, and I've named it. I've named this chart channel up continuation stock index CFDs. So what I do here is I'm only looking for patterns that are continuation patterns, okay? And I haven't touched any of these other indicators, but I have eliminated my triangle patterns so that all I'm looking for are, and my head and shoulders I eliminated, my inverse head and shoulders. So all I'm looking for is what I consider to be channel patterns. I can search for only channel down and channel up, which means that I'm looking for pure channels. I can search for wedges by themselves or in combination because I'm looking for part channel, part triangle. And then my other ones I call the classics, which are the triple and double tops, and I make those separate searches often because they do come up, but you know, you want to be surprised, so I make it part of my daily routine to just have those have AutoChart to search for them, so that I'm not surprised or miss something because I wasn't looking for it. So once I set that up, then so all I'm looking for now are moves that are continuation patterns. Here's, for example, an emerging pattern on the Stocks 50. And this is a long pattern. 200. The reason why I show this is it's 30 minutes and it's 203 candlesticks. And you can see that it's got very strong clarity. It's got good distance between bottom to bottom and top to top. And also you can see that it's got numerous tests of this resistance. Now here's a case where you want to trade the channel like a swing, so that when AutoChartist gives you this signal and this time, you can act upon it knowing that your exit is up